Hey everybody, welcome to episode, 5 now of the Knowledge Business Momentum podcast. Today we're going to be covering the topic of business strategy and how not to let the tax tail wag the business dog. We know that taxes are incredibly important, but they're not the purpose of the business. So today I want to introduce Wes. I know you've already heard from him in episode 1 of the podcast when we did our brief introductions, but we want to get a little bit deeper in that, and we want to go further into that tax topic. So, Wes?
Well, my name is Wes Melton, and I came with KBM, I don't know, probably about a year ago-ish.
Yeah.
You know? And before then, I was running CPA firms. In fact, I don't have the CPA acronym. I'm one of the only people in the entire state of Texas that has run a CPA firm without having the acronym CPA behind their name. I know that because I actually looked it up. But so I've done a lot of things. I work with a lot of business owners. The tax side of things, I'm kind of a serial entrepreneur in a sense. Most of my business have been established for a while, but I'm always looking and always searching for the new thing that will drive myself and drive our strategy that we discuss all the time to really work through and understand that our strategies will work the dichotomy of industry.
Yeah, absolutely. And one of the things that really makes KBM unique, myself, Wes, and Matt Ritter, who's not here with us at the moment, we each have our passion projects. We have diverse businesses. We have things that we like to work on outside of this. But we pursue KBM because the way you approach strategy through KBM, it works. It's worked for me, it's worked for Wes, and it's what we are here to share with you. All right. So why is it important that we each have our own passion projects? Like what does that really bring to a potential KBM client?
So one, it brings fun to life, right? And so if you're working hard every day, but you're not seeing the fruit from the juice, right? Or the juice from the fruit.
Yeah, very good.
That's the correct saying. Then what you're doing is really just creating a lifestyle of A, B, C, 1, 2, 3, right? And so I've been a police officer for almost 16 years, done tons of investigations, and the reason I bring that up is because there's a lot of policy and procedure and step 1, step 2, step 3. And if you don't have a passion for what you're doing, then those steps become hurdles. And so while I love to do the passion projects, like we were just talking before we started this, we're working on the distillery. And, I own a martial arts school. I've owned martial arts schools for 20 years.
Yeah.
And, the profit margins of martial arts schools are not where I'd like them to be. But I don't do it because I'm trying to make millions of dollars. I do it because I love doing it. I'm changing lives every single day. And I have a track record of 20 years of doing so. And so I think passion projects, one, allow you to experience and experiment, if you will, with ideas and thoughts, but you're putting them in action, right? Like anybody can write anything down on a piece of paper.
No.
Anybody can say, this is my goal, right? The people that have changed the world, the people that have made the most money, the people that have made the most impact on their family, which is my goal, are the ones that take an idea and then implement it and then make it work and see, but have the gall and the foresight to say, you know what, this is not going to be the successful thing I want it to be. This is not going to be that. This is a hobby, right? And nobody knows when you start a business. I'll use my wife for example. She owns macrame business. For the last 3 years, she might get 5 to 10 orders every couple months. This month, she's had over 40.
Oh, wow.
She's going to hit significant best numbers for her. And this is a side job. She has a full-time position. But this is something she's passionate about. But now that passion is turning into a real legit business.
Yeah.
I mean, enough so that I can joke with her and be like, hey, we're growing this a couple more times. I can retire. Right? And so, I think when we talk about passion projects, I think every business should start that way. If you're getting into something just to make money, I think you're making a mistake.
I agree with that. I mean, I know money is very important, but it's not everything. If you're not happy when you go to work every day, if you're not enjoying what you're doing, then what is it all really worth? And we see that a lot with business owners who started, as a passion project and they love what they do, but then they get bogged down with the business and the day-to-day work that they lose that passion. And that's something that we're getting a little off topic because we're not talking about tax strategy and business strategy, but that is something we like to reignite.
But it's
that
a
passion.
core KBM principle.
It is, absolutely. Okay, so let's bring it back to taxes. Just in your experience, when most business owners think about taxes, what is the first thing they ask you?
It's always about mitigating tax liability.
How do they pay less?
Yeah, how do they pay less? How can I save a tax dollar today and not putting in the foresight of the future for the business itself? The strategy for KBM is not to build a business that's just successful. It's to build a successful business that is an asset, whether you push it down to a family member or you decide to sell or you decide to close, but it's at least an asset that you have with you.
Now, so staying on that thread there, we're not building companies, we're not building jobs, we're building like a career something you own, something you nurture, you grow that asset. When you're actually building an asset, something you either want to pass off to the next generation of leaders or sell, is paying the least amount of tax actually the goal?
Not normal. I mean, yes, we're like 99.9% of the population. And there is a certain threshold, right, where you're creating so much wealth for so many people that there is a bigger tax strategy to be held for your own personal preference on mitigating your tax liability. Nobody wants to pay Uncle Sam a single penny more than they need to. Whether you're not making it or you're the rich of the rich, then you're always trying to strategize. What I see most business owners fail in is they don't plan on the exit strategy for their company, and they're only solely focused on this year.
Agreed, and that's something that I'm really big on strategy. If you've listened to our previous podcast, we talk about that. You need to set your end goal. What is this company going to look like 10 years down the line before you start focusing on your actions of today? And if you focus on the actions of today or only what my consequences will be this year, you're going to miss the mark. And we've seen it time and time again.
Yeah, and I see a lot of companies that with how they strategize. So there's anybody in the tax strategy world will tell you they can come up with a million different tax strategies. The truth of the matter is it's about 5 or 6 that everyone takes a little bit of pieces from and then puts it together for your situation. I mean, that's just your CPA can get me mad at me. That's the truth. They're not creating the wheel. They're inputting data into a system and it's giving them a strategy that works best for you. I mean, that's just what it is. There's systems that do it out there. You can Google it. Don't take my word for it, Google it. But I'll tell you, where the strategy piece really comes in is taking your business strategy and your tax strategy and putting them together and making a 5, 10, 20-year plan, depending on your personal goal, right? Like, it's just like going into a financial planner. You don't go to a financial planner and say, here's $100.
What can
I get me?
Yeah.
Right? What can I do?
A good financial planner, they're going to say like, okay, we have $100 now. Well, what do you want your lifestyle to look like when you retire?
Right.
They start at that end goal and they work backwards. Business strategy, tax strategies, it's literally the same thing.
100% the same thing. 100% the same thing. And most business owners, especially if they're sole proprietorships, and I get it, small and medium business owners, which is who we're working with, they are sometimes paycheck to paycheck. We're trying to pay my kids' college tuition. We're trying to take my kids on a vacation this summer. We're trying to buy my wife that Coach purse that she's had her eyes on for 6 months. And so we're really trying to save a dollar, right? And I fall in that category too, right? And so
I think we all do it.
Right?
Yeah.
And so I think where most people get caught up is, well, I budget my income so that I can do the certain things I want to do. So I should do my tax. And I'm not saying that the be all end all is don't, pay Uncle Sam more right now. But if you don't consider your business and where it's at and where you're at in this business strategy, right? So just use me for example. I've had karate school. Right? I've had it for 20 years. At some point, I'm going to want that karate school to either dissipate, pass it on to my children, or sell it for a profit. Nobody wants to sell anything for a loss. And so for me to do that, I have to take my tax strategy because I don't know about you, but well, I kind of do. Loaded statement.
Yeah.
But I don't know anybody that wants to buy a business that made $10 last year
No.
because my strategy minimized my liability. But on the docks, I got $10 worth of income. And if you've never gotten a loan from the SBA or from any other, really, other than just cash purchase, right? They're going to want numbers, and that usually doesn't start with the income statement and balance sheet. Usually starts with tax.
Absolutely.
And so that's the biggest challenge I see as a tax strategy guy is small to medium business owners. They're constantly trying to minimize their tax liability. And that is good. Don't get me wrong.
Yep.
And you need to, like I said, it's got to be cohesive, right? We can plan, put a plan into action 1 year, 2 year, 3 year, whatever that goal is for that exit strategy for that business. But, maybe your goal is to become a public company.
Yeah.
Maybe you start some passion project that turns into something that could be publicly traded that you never experienced. My father did that. That was super unexpected. It was a company that did air conditioning units and restaurant refrigeration.
Very cool.
And after about 6 years of him running it, it went public. No one expected that. My dad's CPA, super smart, probably the smartest guy I've ever met. And that wasn't the expected outcome, but it happened.
Very cool. So I think kind of summary of what we've discussed so far is you can't take tax in isolation.
Right.
You have to consider the bigger picture, where you're going, where you want to be. I mean, there's some examples: hiring people sooner, investing in marketing, technology, building systems, branding, better client experiences, better infrastructure. Those decisions could potentially increase your tax burden this year, but they may increase your long-term value more and give you a greater payback at the end of the day whenever you pass it off or sell it.
Just like we were talking about financial advisor, right? They tell you if you put your money in the stock market today, you might have lost $1,000 by tomorrow. But over 18 months, over 36 months, over 48 months, that money's probably going to see a 10 to 12% return. Like that's just the average across the country, right? And so it's a wave, just like a roller coaster. And if you ride the roller coaster and you plan the roller coaster and you can kind of mitigate the dumps and really strategize the lifts, you really maximize your potential and not sacrifice your asset, which is what you put your passion into.
There you go. So let's talk about some common things we see. I know sometimes it's probably good, sometimes it might not be advisable. What do you think about year-end panic purchases? We went a little off script. You didn't know I was going to ask him that, but I got his reaction.
Yeah.
I like it.
So it really depends on the purpose of the purchase. What I see small business owners do, they get to an industry, come to the end of the year, and they're like, oh, I don't know if I can say that on a podcast, but I did. You'll have to edit that out.
I'll figure that out.
Yeah. But I didn't say the word I was thinking.
Yeah.
And they instead of giving distribution or buy, I would tell you if it's a piece of equipment or a piece of marketing or whatever that is actually going to change something for you and you don't need the income, okay. Because it's an asset, right? Because I'm really changing asset for asset. I'm changing $1 for $1 in an asset that on the tax side we can probably depreciate or we can capture over several years. We can do amortization. Depending on what it is, we can do a lot of different strategies. What is not included is, well, I really wanted this $10,000 gaming system for my son. And we use computers because I'm a inter-industry standard here.
Yeah.
So I'm going to buy this computer for $10,000. Well, that's not, the government is going to tell you 99.9% of the American population owns some kind of computer/phone that can provide services at their house for a significantly less dollar.
Yeah.
And so I think that's the biggest issue is what I see is, oh, well, I'll buy my wife a new car because I own the company. And well, like everyone, they're the most beautiful woman on the planet. And she's just going to be my marketing person, right? And so she's going to drive this beautiful Beamer or beautiful luxury vehicle or whatever.
Yeah.
And I'm going to write it off because, it's a business expense.
Yes.
Or my favorite, I'm going out of town this weekend. So I'm going to call my business partner. We'll do a podcast. Talk about it, guys. And we'll write this whole weekend off.
Yes.
That I'm out of town just to do this one podcast.
To be clear, we will not be doing.
No, we won't be doing that. But that's what I hear all the time.
Yes.
I'm going to take my wife and kids. We're going to go to Jamaica, but I think there's a client there that I can talk to for 5 seconds.
Yeah, one business meeting for 10 minutes does not justify a fun weekend of expenses.
No, and we've talked earlier about S corporations, right? And sorry, I do hard conversations. I apologize. I'm a talker. But so we talked about S corporations earlier. One of the big things I see with S corporations is there's a mandate by the federal government, the IRS, and everyone's terrified about it. And should you be terrified about it? I don't know. They have teeth, but they're a lot of bark.
My thought on that is it's when it's time to be terrified, you'll know.
You'll know. But what most people do, and I don't know where it came from. I'll be honest with you, but I see it all the time. So they create an S corporation because there are benefits to having an S corp versus having a sole proprietorship versus a partnership, right? Or C corp, tax books. But they forget that there are rules for each entity, right? And so, like an S corporation, you have to. It's a requirement to pay yourself a W-2 income that is a fair value for that industry. So if I'm running $1 million business, I'm not going to
widget
whatever
manufacturer.
it doesn't matter. And the average across the nation is I pay myself $150,000, but I pay myself $50,000. You're actually violating the right to have that S corp, and that can be punished later at a much higher rate than it would be if you just paid yourself and give yourself the distributions that you can. Now, the IRS does look at your profit margins, right? That's what the tax returns do. Telling them how much money did you make and where are my assets sitting.
Right.
And so what I see a lot of people do is they start to, because their profit margins go down, they start to move around. Well, I'm not going to take a W-2 this year. I'm just going to take all distribution. Because then I can set up a Schedule C business for those distributions, and I can counteract some of that off on losses. But really, the right thing to do is keep your W-2 at the highest level you can keep it at, and still make turn profit during the hard time, then eliminate distributions, and not try to play I bought this computer at home for my child, and that's a business.
Yeah. So to be very honest, I'm not the expert. Wes is here, but I have heard many cases where people like, we chose the S corp election. Why? I don't know. The CPA recommended it. Kind of forgot about that, and then we find out, you're in violation of all these things. Wow, we need to fix that.
Right.
So be just be cognizant if you're.
Well, I think where a lot of that comes from is there's finite choices, right? You can choose to be a sole proprietorship, which rolls through your personal tax return, but then all income runs straight to you. And if you don't have any write-offs, man, you're up the water without a paddle.
Yeah.
And so a lot of people turn to S corps because if you have multiple partners, it distributes throughout the partners, and there's some tax advantages. But you can either be a partnership, sole proprietorship, or a C corp. A C corp means you're actually paying corporate taxes on a business. Probably shouldn't. And what happens is a lot of people, because if you don't have a partner, you cannot have a partnership. You can't create a 1065 partnership. So then you're stuck to, okay, I can only create a C corp because unless your partner is your legal spouse, you can't have sole proprietorship. If it's a spouse, you can have sole proprietorship. But if I go to business with my son, we either have to be a C corp or a partnership. Well, if I go to a C corp, I pay corporate taxes. So the natural response to being a C corp, I pay corporate taxes. If let's relate it to corporate tax, let's make an S corp. But then I'm not going to play by the rules, and that's why that happens.
Gotcha.
It's because most businesses, we'll say, I don't know if I should say most, that's misleading, but
We've seen it enough.
a lot of businesses start with partners. They formulate themselves and they're limited to what their scope, and that's by design. But it's limited in their scope of what their intentions are. So the S corp is the best tax preference, I guess to say.
Gotcha.
And so they go into it not knowing the rules, and then once you're an S corp, it's really hard to go back.
Gotcha.
And so that's got to start at the very beginning. And when you're starting to set it up, you kind of have to have those tough conversations. Like, where are we going? What are we doing? Like, I'll tell you, my karate school is a C corp.
Okay. That actually surprises me.
Yeah. Well, and the reason is because I had no intention of taking a W-2 income.
Gotcha.
Because my goal is to take all the money from the corporation, dump it back into the kids, dump it back into the families that are coming into my school and trying to better their lives and better their situations and learning new life skills and doing all the things we do there. And so if I'm going to take a W-2, and I do have an identical twin brother, and we're partners. And so I had to choose C partnership. Partnership rolls straight to me. So if there's a loss, you get a benefit. If there's a gain, which why are you being business? You're not trying to make a gain, I don't know.
Right.
Then it gets pushed right to me. Corporation, C corp, is taxed as it is. So if I have a loss, no tax. If I have a gain, tax. And the corporation pays that tax.
Right.
And so I kept it that way because my strategy for that business is changing lives and improving families. That's my goal, not to enrich myself.
That is the definition of the passion project.
Right. 100%.
So we've gone a little bit more granular this episode than I think we initially intended, which is great because it's very, very valuable information.
It also helps that we get to sit here and talk.
I know we're in
just having a conversation. We're not zooming, and so we're like just sitting here having a conversation. So I promise you, if we showed you the script of what we were going to do, we're way off basis here.
But hey, I'm learning a lot. But just to bring it back, I mean, let's think of like really 3 levels of thinking. One level is like, hey, can I save $1 today? The second level is, can I save some money in taxes this year? And the third level is, can I increase the long-term value of my business?
And the answer to that question.
Which one are you choosing?
Well, if I'm choosing between the 3, I'm choosing the latter, right? We want to create the asset. We want to have the asset make us the most money at the end of the day.
Absolutely.
I will tell you, if you have a good tax guy and you have a good cohesive business strategy guy, I don't know, I know 2. Then the answer to all 3 questions are yes. We can save tax today. We can build an asset that is ripe for selling or exiting. And we can mitigate the pieces of tax that everyone's always scared of and worried about.
Okay, so we're gonna kind of wrap this up a little bit. Yeah, we've gone a little bit longer. So if you want someone to remember one thing from today, what do you hope that is?
Without being overly direct, I think the one thing you should take away from today is, one, CPA is an acronym. Education is important. I know college education. What they've done is good. My dad was CPA, but he'd be the first one to tell you. It's an acronym. They have a set of theory and knowledge that is superior to mine included. But the practicality of education to real world situations don't always move through theory. And so every situation, absolutely every situation is different. Right, which is what the fun part. Like, this is kind of a passion project for me.
Mm-hmm.
I love this stuff. Makes me a nerd. Makes me kind of bored. But hey, that's why I got tattoos. It makes me look a little cooler.
Yeah. Hey.
But that's the thing. I would say don't do the easy thing, do the smart thing. And plan it out and see it not just today. Like when you marry somebody, you just got engaged recently.
Yeah, absolutely.
So when you get married, I've been married almost 15 years. So when I got married to my wife, I didn't say, how is this going to look tomorrow or next week or next month? Should I sign a lease with her, right? I made a decision that I forecasted that out in the future. When
Absolutely.
you start a business, you're marrying that industry. It may not be the same love like you should with your wife. Make sure it's 100% both ways, guys. Just let you know, and girls. But make sure that you know that it's always progressive and you got to plan it out. So making an immediate decision right now, today, does not equal success tomorrow. And what I think is special at KBM is we travel, we have passion projects, and we're using the same strategies today in our business. We're not just telling you about some theory we read on the wall that kind of we know works because some guy told me in a textbook it works. Like the big companies really that's what they do. They don't implement any of that stuff.
Yeah.
We have industry. We can show you our books for another industry. You can see the growth.
Yeah. We practice what we preach. We put ourselves through it. And honestly, I think that really makes a difference, and it makes us more
Honest.
It makes us more honest. It makes us easy, more approachable.
Right.
And so if you're sitting there and any of this resonates with you, or you just have a question about an S corp, I have multiple now. Please reach out to us. We have 3 programs depending on what size of business you are that we would love to put you through. We really do take a strategic approach to accounting, tax, data analytics, and ultimately increasing your business's value.
So what you always say, don't work
Don't
work in your business, work on your business. He says that at least once a week. So
I do. I do. But yeah, we do believe that tax strategy should serve as business strategy, and your business strategy is the core of what you do, and it is the dog that you do not want the tax tail to wag.
100%.
So with that being said, we're going to let you go for today, and we'll catch up with you in 2 weeks. Thank you for listening.
Thanks, guys.